Are you new to real estate, struggling in real estate, cash buyer, wholesaler, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. Whether you're starting out or already seasoned, this podcast was specifically designed to give you practical tools that you can implement right away. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I created this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all using low to no cost tools to help them analyze properties and craft strong offers. Welcome to the Corner Barn. This is the weekly deal analysis. Let's get into the show. Before we get started, I do want to ask you something. If you would hit that like button for me, I really appreciate it and it helps the channel out a lot. This week on the show, we are going to analyze 3306 Humboldt Ave in Minneapolis, Minnesota, 55412. This is a 2-bedroom, 1-bath, 1156 square feet. They are asking $192,500 and they've been on the market now for 171 days. So it's either really overpriced or it's really poor condition. I'm not sure which, but let's look at these pictures and see what else we can find out. All right, so we got a nice retaining wall here. It does look like we've got some stress. Well, I would call them more than stress corrects. Some chipping up here. Definitely needs to be weeded in that landscape bed. Older cabinets, painted, Formica countertops. I'm gonna go with early to mid 2000s tile floor. Same with the color here. It's early 2000s. Can't tell if these are built-ins or what that is, but if they're built-ins, that's really cool. Good use of space. Hardwood floors seem to be a little busted up here. I'm not sure what that is, but scuffed on the floors. Oh, that's a beautiful built-in. If you couldn't tell, I really like built-ins. Floors definitely need to be refinished. And works. Backyard is overgrown. All right, what else can we see here? So pictures told us a little bit of a story that it's not in the greatest of condition. In 1917, property details, let's see what they tell us. Charming, story and a half. Views of downtown. It's really not telling us much about the house. Sounds like the location's good because this agent's playing that up a good bit. Sold last in 13. All right. Here we go. Yep, 2013 for $40,000. Goodness. Wow, $40,000. That's a good price. And then with a rental, getting 1450. Oh, look, it got 1575. So there we know our rent number because that was in February. So that's probably coming due now. And then they originally listed at 200 and have been chasing the market down ever since. But at 1575, that's a good number to know. Property taxes, 2662, bunch of permits. Electrical, plumbing. I'm not sure what this one is. All right, median list price in the area is 250, median sale price. So we're below both of those. Average days on market is 30. We are well past that. And what else has sold in our area? Not telling us what any of this stuff is. These are all much, much larger homes. If there's anything that will tell us down here. So 210, 175, 210, a lot of twos, 160. We're getting closer here. There's one contingent. So 3-1. And it's under contract at 195. And rental number, let's see what apartments. Where's the houses for rent? Well, that's not telling us anything there. All right, I think we have pulled out everything we can from here. And I'm not going to pick the ARV yet because I do want to look through the InvestNest and see what they're saying. I have it pulled up here on the InvestNest. I love this site. Super user friendly and pretty easy on the pocket as well. I will have a link below that if you want to try it out, you get 1 week for free. And if you like it past that, you get 50% off of your first month. Just copy and paste that link and follow the steps if you want to try it out. This gives us some basic intel here. And if I were going to try to actively pursue this one, I could skip trace, get the seller's contact information, and reach out to them directly. But I'm not. And I would also start with the agent because it is actively listed. Oh, and they don't charge extra for skip tracing. It's pretty awesome. Let's run some numbers, shall we? 3306. Bolt. All right. What did they say it was? All right, so they're saying the estimated purchase price or the estimated value is 191, and they are listed at 192.5. I still think that's going to be a little high, considering it's been on the market for 171 days, and they've been at this price now since October, and it is currently December. So it's clearly not worth that. If it was, it would have sold already. So I think we take it back to definitely definitely not 2013. But maybe this didn't go on the market. This was a foreclosure, and they bought it for 152 back in 2013. That's what it looks like, at least. So based on these figures, I think we go with the tax assessed value. Because honestly, that's kind of where I'm leaning towards pricing wise. So we got a handful of stuff that, anything else down here under contract? There's really nothing under contract or sold that we have to go off of outside of this one here, which I think they're a little bigger. But 160. Let's look at this one and see what we got. This is 160 and it's been on the market for 100 days. And they started at 185 and they've been chasing it down since August. 22 was kind of the top of the market, and that was that 165 mark, and now it's even below that. Ooh. All right. Based on all of the things we just looked at and just pulling into my knowledge base, really, I think we're going to say our ARV or after repair value is going to be that 160. We're going with an ARV of 160,000, and I'm going to offer them 70% of that minus repairs. Ultimately, I think our repairs from looking at the pictures are only going to be about 10 grand. So let's calculate that real quick. 70% of that gives us 112,000. And now we're going to knock off another 10 for those repairs, making our offer price 102,000. We're going to pay both sides of closing, and that's going to be about 4%. Our lender charges 2 points is pretty standard in the investor world, whether you're using a DSCR, debt service coverage ratio lender, or hard money lender. And if you're using a traditional lender, you're paying them anyways. They're just going to call them something different. Cost of improvements we said are going to be 10,000, and I do want to roll those into my loan. And we'll put 25% down. I do want to extend this out to 30 years, and we'll leave that rate right at 7.04. Pretty much where investor rates are today. All right, our rental income is 1510 from the InvestNest. Realtor.com was showing us the same. Now we're going to jump over to the HUD website, otherwise known as Section 8, to see what they're offering. I need a favor. If you're getting value from this, would you hit that like button for me? It really helps the channel out, and I appreciate you for it. Now, back to the video. I got it pulled up here on the Section 8 or HUD website. I will drop the link below as well. It's kind of hard to learn to navigate, but once you figure it out, it's a super useful site. So for a 2-bedroom, they're saying they will pay a maximum of $1,685 versus our 1510. I think we're going to stick with the lower number just to be on the safe side. I'd rather undershoot it than overshoot it. Property taxes are good. Insurance, I figure about $125 a month, which is $1,500 a year. 10% management fee. Our tenant's going to pay all the utilities, so we're not going to factor those in. Our reserve fund, I call it my war chest. That's for repairs and maintenance, vacancy, and CapEx, capital expenditures. That's going to be like your big ticket stuff, like your roof, siding, windows, HVAC, the big ticket stuff. Vacancy, self-explanatory, and repairs and maintenance. It's never a matter of if something's going to go wrong. It's when, especially when you're coming to deal with rental properties. So we keep 15% of the gross profit every single month, put that into a separate account. Appreciation rate, pretty standard, about 2%. I like to increase my rents 2.5% a year. And we are real estate investors. We don't pay full commissions. When we go to sell, we'll pay at 5%. All right, let's see what these numbers look like. And we have a winner. All right, $225 a month net cash flow. That's a pretty good cash deal. So for $34,000, you can make $225 a month net. It's a pretty good number. Let's break the rest of this down. Cap rate, more of a multifamily thing, but it works. Most people look for at least an 8 cap is kind of like the standard go-to number. So this beats that. DSCR, you're good. Generally, they look for at least like a 1.1 or 1.2, depending on the lender and all your qualifications. Cash on cash returns, almost 8%. ROIs, 16.5. It's good. If you follow the 1% rule, that works as well. And another thing I love about the InvestNest, they break all your numbers down so you see where your money's going. Very useful and helpful here. So by the time you go to sell this thing, you're looking at almost a 17% cash on cash return. Pretty good return over 10 years. I'm not complaining about that one bit. Now we're going to jump over and do my favorite part, the creative side. This is my creative calculator. You can download it off of my website, christhompsonteam.com. There's a bunch of free useful tools on there. I hope you download them, love them, enjoy them, and you close the deal with them. If you do, come back to this video and drop me a comment and be like, hey, I used your stuff. It was awesome. I appreciate it. That would mean the world to me. All right, our ARV we said was 160,000. On a creative offer, I'm going to get closer to what the ARV number is, also closer to what they're asking. So they're asking the 192. If we're throwing out a seller financed offer, let's just see what the math comes out at if we offer them really close to what they're asking. So 190 and interest rate, we'll say 2%, see what we can get away with. Now, to find out our PITI or principal, interest, taxes, and insurance, I'm going to jump over to Bankrate.
Hey, real quick, can you hit that like button for me? I appreciate you. Thanks.
This is Bankrate, just bankrate.com, but I'll also have a link below. Super useful, and I love this site. 90. And why would we offer 190 on something we're saying is only worth 160? Because if we can get seller financing at a 2% interest rate, really good numbers. And it's more enticing to the seller. I only want to put down 5%, 2% interest. Our zip code is 55412. Our property tax, 221, 222, 222, insurance, 125. And all right, 1,014. And that is our principal, interest, taxes, and insurance. So 1014, we'll plug that in over here. And our potential rents, we said were what? 1510. 1510. All right, not horrible, but not great either. Gives you a net cash flow of 118.50. So I think that 190 is a little bit high. Let's scale that back and see what 180 looks like. I don't think it's going to change a ton, but let's see. 180, 5%, 222. All right. Yeah, I kind of like that number a little better. So 979. Change this to 979. All right, now we're getting a whole lot better here. So gross cash flow 531, war chest 2.25, 151 to our property manager, which gives us a net cash flow of 153.50. Want to plug in over here our cash to the seller was 9,000. This agent's clearly not getting it done. We're going to offer them $500 just to get out of the way. Closing cost is going to be that 4%. And holding is 2 months of this mortgage payment here. And a good TC or transaction coordinator will cost you about $1,500. So not a great return. So for $20,000, you can make $150 a month. If you are local and you're self-managing, that number just jumped to 300, and that is a huge, huge swing in your numbers. Not factoring in any rent increases in here, you're looking at about 11-year return to get your initial capital back. I honestly think this is almost a better cash deal. So if we come break our numbers down over here, for 30, just call it 34,000, you're going to make 225, or for 20,000, you can make 150. There again, there's the power of how much you put down. This is a 5% down versus a 25% down. For me personally, I'd rather keep that 20% in my pocket and make a smaller cash flow. I would probably even offer a little bit less. There you have it. Cash and creative analysis on 3306 Humboldt Ave in Minneapolis, Minnesota. I think they both work, and it really just depends on how you negotiate the deal. Do you want to put more down to get more back every month, or do you want to put less down and get a little bit less every month? About $100 difference for roughly $15,000 difference. Personally, I'd be going for the creative deal. That's going to do it here for us this episode of the weekly deal analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We'll see you next week.